Alpha Kunle, salary don't show. How the plan spend your power?
You don't mean. Still the same thing as usual. Oh. I'm paying my bills, getting some groceries for the house, and treating myself to some ugly moments on the week.
Totally understand. Or have you thought about investing some of your salary instead of spending it all?
Invest, ke? With what money? My guy, investment is rich people talk. Oh. As it is, I'm still struggling to cover all my bills from this my little salary.
Nah, not at all. Investing is for everyone, no matter your income. Even small amounts can grow over time if you start early.
Oh yeah, you don't convince me. But then, how do I start up this investment in my guy? What are the steps to it?
Start by setting up a budget. Calculate how much you need for your expenses and all your necessities, and then identify how much is left for investing. Lead Capital offers several investment products based on your risk appetite. For starters, we have Lead Fixed Income Fund. If you don't like risk, it's a very low risk investment product, and your money is invested for a minimum of 90 days and you earn dividends biannually. That's twice in a year. It also gives very good return. The yield is currently above 18%. You also have the Lead Balance Fund if you're interested in one with higher risk or also higher returns due to the equities aspect of the fund. The money is invested for a minimum of 90 days and you get paid dividends biannually, and the yield is currently above 23%.
That doesn't sound too hard, oh my guy. How come I didn't know about these things before now?
Also consider setting an auto debit to your investment account as soon as you get paid. Even if it's 20k, 50k monthly, it will go a very long way.
Oh yeah, now. I guess I can start up with like 50k for my salary this month, instead of just boiling it all away on the weekend.
Download the Lead Trader app, available on Google Play Store and also on Apple Play Store, or you can use the website www.leadtraderng.com to begin your investment journey.
Lead Capital PLC, your guide to financials.
Good morning, esteemed listeners and investors. I want to welcome you to another edition of our Monday morning breakfast session. First of all, I want to say Happy New Month. We cannot appreciate you enough for your continuous audience and participation. I am Akinyemi Omotayo, and joining me this morning is Mr. Bewato Amosu Sunday. Good morning, Mr. Sunday. And very quickly, I'll be taking you through the happenings in the fixed income space and what to expect this coming week. Without further ado, let's delve right into it. Looking at the money market and treasury bills, last week, the trend maintained a strong drive, and we saw open repo rates and overnight rates close at 26.50% and 26.95% respectively. Liquidity closing at 1.90 trillion. Trading activities closed the week on a bullish note in the treasury bills market, with yields dropping due to increased demand driven by ample system liquidity. As a result, average yields fell by 5 basis points, settling at 20.74%. The latest NTB auction saw a strong demand, with the CBN's 500 billion oversubscribed by 671 billion, resulting in a total bid of 1.17 trillion. The CBN ultimately allotted 615 billion. From the table below, we see stop rates remain steady for the 91 days and 182-day bills, while the 364-day bills saw a 7 basis points decline. Quickly looking at the bond market. Taking a brief look at the bond market, the FGM bonds had a solid week, with the secondary market closing on a positive note thanks to ample liquidity in the system. Bond yields decreased across the curve, with short-end yields falling 23 basis points and mid to long-end yields declining 10 basis points over the past week. Actively traded maturities over the week were the 2026, 2030, 2031, 2033, 2035, and 2049. Bond yields dipped by 150 basis points on the average, closing the week at 18.84%. Looking at the foreign exchange market, for the foreign exchange market, the Naira witnessed a decline in value as we saw a negative 0.41% change, closing the week at 1,585 Naira 55 kobo as compared to 1,579 Naira 79 Naira in the previous week. For this coming week, this week we see funding rates holding steady, assuming no major outflows from the system. It is also expected that the Treasury bill secondary market may experience a quiet trading week awaiting the primary market option. The bond market is expected to trade on a bullish note driven by robust liquidity that will likely sustain investors' buying interest. That being said, we cannot overemphasize the need to take position in the fixed income space, especially looking at rates this present period. The market can be accessed using a wide array of our products from the lead fixed income fund, which focuses primarily on capital preservation and growth. The lead fixed income fund with a low risk profile and dividends on the fund are paid biannually. It has a lockdown period of 90 days, and it is worthy to note that the unit holders of the product have experienced 100% growth in their investment since the inception of the fund. For clients that intend to balance out their portfolio, advised to subscribe to our lead balance fund. This fund invests 50% in high quality stocks and 50% in money market fixed income instruments. And because of the equity component embedded in this fund, risk profile is medium and dividends are distributed annually, giving clients the options of reinvestment or collection. With a lockdown period of 90 days, clients have easy entry and exit to the fund. For our potential clients and investors with intention to place funds for a specific duration of time at a fixed rate, we encourage you to subscribe to our Lead Gazelle portfolio with tenors ranging from 90 to 65 days and offering competitive rates that exceeds your standard commercial bank deposit rates. Also, for investors that have intention to hedge against our depreciating Naira, we implore you to sign up to our Eurobond trading platform. This platform provides our clients access to invest directly in US dollar debt instruments and earning your returns in form of coupons in the same US dollar, which are being paid biannually. It is also worthy to note that the minimum investment threshold to subscribe to Eurobonds is $200,000. For investors who may not be able to meet up to the threshold of $200,000, we are excited to offer you our Lead Dollar Fund. This product has a minimum subscription fee of $1,000 with a minimum holding period of 180 days. Dividends on the products are paid biannually whilst maintaining a very, very low risk profile. That being said, let me hand you over to our in-house equities analyst, Mr. Sunday Goato, to give you an insight on the happenings in the equity space for last week and what we should expect this week. So I'll go over to you.
Good morning. Thank you, Mr. Tayo. Good morning, our high esteemed audience and lead investors. We appreciate you for always being there for us. Happy New Month. And we pray for a blessed return on all our investment decisions throughout the month. Last week was a very fantastic week for equity investors. The market return high, it broke the resistance level to a new height on Tuesday. And as we have rightly said that there is more stability in the economy, and we have seen results even during the weekend. A lot of companies posted their results, and we have seen companies, even from the industrial sectors, the consumer goods, coming out with good results. That to show to our investors that people that have keyed in is a great opportunity for all our investors. So on a quick note, we are going to look at the equity market, what transpired over last week, earning update for the result that was posted last week, dividend qualification window and our stock recommendation, corporate actions, dividend payment tracker, and our weekly expectation. So on Monday, the market gained 79 basic points on Monday. We saw the buy took over the market, dominated the market on Monday, and the market returned 79 basic points on Monday. And on Tuesday, that was the first time that the market went high, broke the resistance level of 109 basis point to another great high that you have never recorded in the market before. So on Tuesday, the market closed at 111,609.22 basis point. That is the first time ever the market attaining to that height. That shows that the overview of the market, the stability in the economy, the result that was posted, activities in the market is going high. And as we have recommended to our client, and this is the time for us to take position in the market. If foreign investors, we saw what happened in March for the first time ever, the FPR, the foreign portfolio investment, was greater than the domestic one. That shows that the confidence in the market, more foreign investment are coming and they are investing in the market. And we have seen the result on Tuesday that the market for the first time got to a new height. And also on Wednesday, the market also traded bullish. So contributing what? 27 basis points all over the week. So we saw great results during the week. And on Tuesday, we saw buy interest, people taking advantage of the profit that have earned in the week. On Thursday, the market went bearish. On Friday also, the market went bearish. Overall, for the week, the market closed on a positive note. On the week to date, the market gained 1.9%. That was on for that week. So we saw a lot of increase in the market performance. So, and across sectors, last week we saw that more activities was turned towards other sectors, but last week we saw activities towards the financial sector, leading the total volume by 72%, followed by the consumer goods and the other sectors. So what does this show? That there are more interest turning towards the financial sectors as we are moving towards the half-year results. People are taking profit from other sectors and have declared their result and also coming back to the financial sectors for the interim dividend payments. So as we rightly said, this is an opportunity for us to have investment across board, so that once you have a good result in one sector, you can also invest in other sectors, balance your portfolio, and you are going to have a maximum return on all your investments. So last week, we saw the market returning 111.720 basic points, and a change of 2.49 was recorded. Year to date, the market has gained 8.56. And this is what to show to us that despite we don't have that surge like what we recorded last year, but the market has been stable, value has been created, and people haven't returned on their investment. So over 3.7 billion shares was traded last week, valued at 119.39 billion was traded last week, contrary to what we have 3.9 billion last week. So we have seen values being created. Financial sectors led transaction last week, followed by consumer sectors, and we saw the likes of UBA. That is UBA also gaining above board. What we saw that that is the company and the investing more in UBA. That means that they have seen something. They know what the company, the direction of the company, the direction of the economy, that is where to put their investment in. If the owners of the company are investing more, that shows that they have confidence in the performance of the company going forward. So that is a pointer to the investor that let us follow trend, let us follow what is happening in the market. Let's put our money where we know that the return will be maximized. And we saw that last week. Fidelity also, we saw also activities around that sector. Access Bank also coming out with high volume last week. So that shows to us that there is something that they are expecting. There's high expectations from the owners, the promoters of the company. That means that they have seen that the result is going to be fantastic. So this is an opportunity for us to invest across board. We've seen consumer goods doing well. We see industrial goods doing well. Out of the negative zone, they have moved to the positive zone. So across board, let's invest. This is the time for us to invest. By June, the results will be coming out. July, the dividend will be declared. So this is the best time for us to put in our money now, so that at the end, when the results will be coming out, then you are now going to wait whether you are going to take the dividend or the appreciation. So across board, we have seen gain in the market capitalization. The market capitalization grew to 70.46 trillion. That is something high that we have not recorded before, to show that overall the market has add values and there are increased investments across our sectors. Out of 5 sectors under our coverage all returned positive outside the oil and gas. And we have seen that due to instability in the global markets, the oil and gas, a lot of things have been moving in that sector. And we have seen also affecting what revenue of the economy. So that sectors compared to what they did last year has been a bit of more tension in that area. And we saw OPEC saying that they want to increase their supply, and that may likely affect what the prices. And we also know the case that Donald Trump has been giving that they want the price of oil to go down, so that the inflation rate in the US can also come down. So that may impact on that sector. But the good thing for us is that in Q1 in Nigeria, the production has increased. So the more production we have, despite the shortage in the prices, that can cushion that effect of low in prices. So for people that have made profit in that sector, we can take out some profit and also invest in other sectors that are doing well, like the agricultural sectors, the industrial sectors, and the consumer sectors. So we can have investment across board. This is what we are telling us this morning. The best time to invest your money. This is the best time for you to don't wait until the result are out. The result that was posted during the weekend, they are all good. So we are advising our clients, our audience to invest. Let's bring out the money, take out some profit, invest across sectors, and you are going to have value for your money. So we've said this over again that across board, we have seen good results posted from Access Bank. They have increased in their earnings per shares compared to what they did last year. Zenith Bank, despite the increase in their outstanding shares, also has a bit of negative return as a result of dilution in their outstanding shares. And we believe by the half-year results, they are going to move from what positive to positive territory. And we've seen good results across board, banking sectors, the agricultural sectors, the insurance sectors. All sectors seems to be on a positive trajectory. And we encourage all our clients, let's take decisions and let's move. So dividend that we are expecting this month, Dangote Cement will be paying, and the qualification date is on the 10th. So we still have opportunity for people that have not invested in Dangote Cement. Honestly, Dangote Cement is currently on that ban. So this is an opportunity for clients to take advantage of that stock now. It's time to invest. On the 10th, the register is going to be closed. We can see return. Analyze dividend yield is 53.30. So that is a good investment, and the dividend yield is 6.82. And there is also a room for capital appreciation. So let's take position now in Dangote Cement. It's currently undervalued, and we know they can do good more in their half-year results. So this is an opportunity for people to buy more. In Azamaza also, the qualification date is also on 26th of June. Let's take position. Presco also is paying 13 naira. Let's take position. And we have seen what Presco did is that for them to move their frontiers, not just only in Nigeria, so they have expanded to Ghana. So that has affected their top earnings. And we have seen in the result that they have posted, and their penny have increased as a result of expansion in their frontier. So we are encouraging people, not just only in one sectors. Let us look at sectors that their prices are inflation adjusted. That means that the control of the prices based on purely on demand and supply, not on regulation. Like we saw in the banking, that this is the capital ratio and what you can do with your fund. But in that sectors whereby it is prices inflation adjusted, the return is going to be positive. So these are recommendations for the week. Access Bank is good to go. GTB, UBA, UCAP, Zenith Bank, Aiko, Mazad, Laseco, Boa Cement, CAP, Dangote Cement, Capri. They are top of our recommendation this week. And we are saying for MTN, Kutis, Okumu, Sterling, and Missouri, we should put on no. We saw the result of Kutis coming out during the weekend. Their result was good, and then we still be on our review, and we'll be informing our clients what to do going forward with the result that we have seen over the weekend. AfriPrudential is currently on sale. Geregu is on sale. UACN is also on sale, and Transcorp is also on sale. So dividend payments, we are expecting on the 5th, UACN will be paying 22 kobo. May and Baker is also paying 4 kobo on 5th of June. CAP is also paying on the 6th of June. So we are encouraging our clients an opportunity for us to reinvest our dividend proceeds, knowing well that the economy is good and the results that have been posted are also fantastic. And telling our client that prices will not go down as usual. With the level of the result that has been seen, stability in the economy have shown that the market will keep on growing. And we have seen a lot of foreign portfolio investments. So once they are coming in, the prices will keep on going high. So we are encouraging our clients to take position, reinvest the proceeds of your dividend, knowing well that you are still going to earn more as a result of good results that will be posted by the company that you are investing on. So we encourage our client this morning. This is an opportunity for us to bring out our funds to invest in the market. The investors are the ones that benefit in the economy. So we are encouraging our investors this morning. Let's invest now, and we are going to reap the result of our investment. So our outlook for the week, we expect more buy interest over the week, and the result will be posted. We have seen results over the weekend. A lot of companies posted their results over the weekend, and the results were good. So we expect more buying interest to dominate the market. It's an opportunity for people also to take position ahead of the half-year results. So we encourage our client this morning that the market will be bullish this week. People will be buying more, expecting good corporate actions from companies as their results will be filtering into the market. So we expect the market to trade positive this week as a result of bull taking over the market, position ahead of the corporate action. So with this, I've come to the end of the presentation, and I wish us a very wonderful return on our investment. So the floor is open for questions. If there are questions, the floor is open for questions. So for now, the first question is that, please, when we first holding commence allocation of the shares to their client, for now, there is no information as regards that. We expect before the end of the month of June, the registrar should be able to inform the investment community about the allocation period. So the next question is, what could be the potential of the Trump presidency affect the global market, especially Euro bonds and issued? But what we have seen even this morning now, we had a brief discussion that for Angola, Nigeria is the only bond trading positive this morning. And we have seen a lot of instability in the global market, and even in oil and price, that may likely affect the bond market as a result of instability in the oil price. So looking at the Donald Trump perspective is that he wants the prices of oil to come down. And that will also affect companies that their major source of income is on oil. So we expect a kind of a mixed trading depending on the global tension, the trade tariff results, the like. So that will be the major catalyst that will affect the bond price this year. So we expect a mixed outlook in the bond market. This has a lot of instability in the crude oil prices across the globe. So with this, another question from our audience, ECB signal potential rate cuts or monetary easing, is now a good time to hold our Euro bond?
Okay. Thank you for the question. So with potential rate cuts in the markets, we would expect that prices of our bonds particularly will start to gain momentum. You know, just as we all might be aware, there's a relationship between interest rates and bond prices. So when we begin to see rate cuts, I think it's just a good time for one to hold their positions because potentially you would naturally see prices of bonds start to improve. Okay, and again, we're looking at the European Central Bank now. So potentially the decisions of the ECB would likely not have a major impact on the Eurobonds. If we were talking about the US threats now, here we can look at, okay, how will the direction of rates in the US affect Eurobonds. But for the European Central Bank, the impact is almost non-existent. So it would naturally not have a major impact on the prices of the Eurobonds. But I think the major focus should be on what direction the US Fed would be moving. I think at their next meeting, it would be quite interesting to see what their decision would be. But I think that with where market is right now, for anyone who's looking to buy or probably currently has, I think it's just best that you hold your securities and then we watch what the US Fed's decision would be for next month. By the time they meet, sorry, in this month, by the time they meet in June. Thank you.
So we have another question. What is your MTN is blue. For the MTN, is currently on hold. That's what we say. It's currently on hold. It's currently on review. Buy. MTN is currently on buy, so there was a mix up in the color. So MTN is buy. So sorry for that mix up. Is color. So what is your expected impact of the insurance bill on the insurance stock? Which stock will win? Currently, what we have seen is that last year the Senate passed the bill for the capitalization for the insurance companies. And we expect that by now that we should see a lot of offers in the market, but for now, nothing has been done. So currently, what we expect is that there will be increase that what we saw in the banking sector last year, and we saw a lot of activities around that sectors. Prices also increased and values were exploited. So also we expect that also to dominate the market. And we have seen Concordia, there are many investors that are coming in, buying into that sector. So that's what we see there will be increase in that sector, new investors coming in to partner with the existing company. So we advise our client, as we have said earlier, Concordia is good to go. MEM is also good. It's part of our recommendation. AICO also, they are part of the stocks that we expect to dominate that sectors. And we have seen the result posted by Concordia. More investors are coming in and they are doing fine based on their current results posted to the markets. So another question, let us have your dividend payments stock that can position for the mid-year. So we work on that, but currently we advise people to buy Dangote Cement. It's good. The analysis is 55. That is a fantastic stock for people that want to earn dividend to position in Dangote Cement. And we also recommend Mazak for people to buy as part of our recommendation for now. So we work more on anticipated results from the financial sectors and other sectors that are going to be paying interim dividends in our subsequent editions. So why is my trading account set to be suspended? We are sorry about that. If there have been in activities for a long period of time, CSS put accounts that are not traded for a long period of time on suspension. So we reach out to you for you to do your KYC updates and you have your accounts back for trading. So thank you. So what is your opinion on Dangote Cement? So Dangote Sugar, we've said that we have seen NASCON a lot of interest about the merger going on and a lot of speculation, but based on the results that are posted in the fourth quarter, we have seen a positive trajectory, and we know that in the consequent results, Dangote Sugar is going to post what positive results. We have seen a lot of backwardation, expansion in their activities, and which have reduced the impact of the forex loss, and then the high cost of capital. A lot of things have been reduced now, and that will favor their top line. So we expect Dangote Sugar to post good results. So for people that want to buy. It's currently under review, and we have recommended people to buy now. Since both of them are planning to buy, until when we see positive results. Currently, Dangote Sugar is currently on review until we see their result before we can now recommend people to start taking position. So for people that are interested in Dangote Sugar, Smartcorn is also a good stock to buy in place of what Dangote Sugar. So thank you. So what is your, okay, we repeated the questions. So thank you, our audience. We really appreciate this. Has been a very impactful and interactive section, and we hope that we continue to be here to give us updates as regards the market. So we wish all our audience and our lead investors a fantastic investment week. Happy New Month, and have the best return on all your investment throughout the month. Thank you for joining us. You have a great day.